Welcome back. On today's show, we're going to be joined by our mortgage expert, Steve Tetzner, in just a second. But I feel like I'm a broken record at all times. You know, it's almost the same thing for a full 6 to 12 months that, I ask about mortgage rates, and they're good, and and they keep getting better, or they're just historically very good. So I want to welcome Steve in. Steve, how are you?
Doing great, thanks.
So Steve, I'll jump right in. Just kind of asking you, current mortgage rates right now, what are they, and what type of movement have you seen in the last 30 days?
Well, in the last 30 to 45 days, we've actually seen the rates dip about another 1/8 of 1%. So we've actually seen and been able to offer people purchasing homes a 30-year mortgage under 2.5% with no points. 15-year mortgages are down around 2.1% with no points. So we're seeing what I believe right now to be the absolute historical low of mortgage rates. It's incredible right now.
So here's the question, but you're probably not going to, well, you might like it, but you're going to tell me you don't know. But where do you see these rates going in the new year?
I honestly don't know, Rob.
Can they go lower?
If you ask, if they go any lower, I'm not going to get any sleep at all. We're working like 70 hours a week trying to keep up with all the people trying to either buy or refinance and take advantage of these crazy rates right now. I just don't know. There's all kinds of speculation. It's really going to revolve around what happens with the economy with COVID. If we continue to spiral and, COVID's getting worse, then I think there's a potential for another 1/8, maybe 1/4% tick in the rate. If we start to come out of the COVID and the vaccines start working and the economy starts to, I don't want to say normalize because I think we're a long way away from that, but starts to improve, then we're going to see the rates start to go back up again.
Okay. On our last show, we talked about refinancing and the extra 0.5% or 50 basis points that's getting added to loans when you refinance. Can you quickly again just kind of tell our viewers again what that is, number one, and number two, how is that affecting the market now?
Well, it's not really affecting the refi market too much just because rates are so incredibly low, but Fannie and Freddie were projected to lose about $6 billion this year. So the FHFA that oversees them allowed them to increase their fee or their price on refinances so that they could try to recoup some of those losses. So if somebody's purchasing a home and equal scenario, someone is trying to do a rate and term refinance, if the person purchasing was getting a 2.5% with no point, the person trying to refi would get a 2.5%, but they would have to pay a 0.5 point to get the same rate as the person purchasing. So it's not a half to the rate. It's a 0.5 point to the point side of the spectrum, which basically is making the refi rate about 1/8% higher than the purchase.
For the duration of the loan, that 0.5 point up front.
That's the rate you're locking in.
Gotcha. Okay.
That's correct. Yep.
Okay. So let's move to what I wanted to talk about today, and that was the differences. If you can explain to us conventional loans versus jumbo loans, and how they actually the differences and how they work.
Sure. So there's a threshold that's set every year. Matter of fact, how this conversation came up is the new limits for 2021 for conventional loans was just released. The new limit will be $548,250 here in Rhode Island. So that means that anybody that is borrowing $548,250 is qualified for these rates that I've been talking about, the 2.5 and the 2 1/8 and these crazy low interest rates. Those are called conventional or conforming loans. Those are your standard Fannie Mae, Freddie Mac, fixed rate or adjustable rate mortgages. Once you go $1 over that amount, you go into a different loan category. You go into what's called a jumbo mortgage. A jumbo mortgage is an entirely different money supply. So that money is typically coming from, could be coming from alternate types of bonds or even bank portfolio money, something other than Fannie Freddie. So those rates are typically higher. In a normal market, usually about 3/8 to 5/8%, depending on the product and the lender. So obviously everybody's always trying to get into the best rates, which means trying to get into that $548,250, which went up from $510,000 this year. So we saw almost a $38,000 increase in that loan limit for 2021.
Right. Okay. There's no extra points associated with one over another just because you're in a jumbo. It's just the rate that changes, correct?
Well, points, the rate and points go together. So, I
Right.
mean, if someone was getting a jumbo mortgage and the 0 point rate was 3%, if they paid a point, they could probably get 2.75. If they paid 2 points, they could probably get 2.5. So they're correlated together. It's not one or the other.
Right. All right. Yeah. No, I meant that in a sense. If you were to, it's not when you go to a jumbo, people don't have to pay more points. You just got the rate. So now, from an underwriting standpoint, does anything change between those two, between conventional and jumbo?
Yes, the underwriting guidelines are entirely different. Typically, with a conventional loan, the Fannie Freddie loan, we can typically get loans approved up to almost a 50% debt to income ratio, which means that someone's been at their job and is working overtime but doesn't have enough history to use it, and their debt ratio is coming in high and a payment that they could well afford. We can still get them approved on a conventional. When you go into a jumbo loan, those loans are typically going to be manually underwritten. They're not using an automated underwriting engine. Therefore, they're going to be to more strict ratios. So there's going to be lower debt to income threshold, debt to income ratio thresholds. As well, the jumbo loans typically have reserve requirements anywhere from 3 months to 12 months, which means that after the transaction is complete, the borrower has to have anywhere from 3 to 12 months worth of mortgage payments in assets left over in their portfolio.
Wow,
So it's not just coming up with the down payment money, they actually have to have reserves as well.
Wow. Okay. And those limits, like you said, it's up to 550 right now. If you were to look back 5 years, I know I think it moved up $10,000 or $12,000 from what you said. Have they? Every year do they increase? Or there's some years that are bigger than others? How do they set that? Number one, and number two, what historically, what would that have looked like 5 years ago?
5 years ago, that number probably would have been somewhere in the 350 to 360ish range, probably. They have a formula where they're looking at housing prices across the country and trying to accommodate increases in housing prices to try to keep the average person into a regular conventional loan so that the house is more affordable than having to move into the jumbo category. So every year, almost every year, we've seen an increase. Sometimes the increases are small, sometimes they're significant. This year, it's a 7.5% increase over last year. That's a pretty significant increase in 1 year.
Yeah. Are there certain people that might wait it out? If they're buying a certain house, they're getting to the end of the year. Is there any benefit to saying, and I don't know when it changes, if it changes right on January 1st, does it make some sense that people hold off on actually the borrowing because they can get more and they could slide back to the conventional maybe just because they're raising those limits?
It's pretty tough to do because if you're in a purchase transaction, I would say the answer is no, because you're going to have to redo your contracts. But if you were refinancing and let's say you had a $600,000 balance and you were paying your principal down to take advantage of the lower rates and refinance, then someone like that would definitely probably wait and not put the extra $38,000 into the transaction.
Okay. And do these limits help or hurt the real estate market? So in a sense, what do these limits do if all of a sudden housing prices are going through the roof, and then you're saying, all right, well, so many more people take out a jumbo mortgage now. Does that hurt the industry, or how does that affect things?
I don't think it has any negative effect whatsoever.
Okay.
I mean, it would be a positive effect raising the conforming loan limit because it's going to open up that money supply at the better interest rates with the more favorable underwriting terms to more people. So as the housing prices are rising, a house that someone might have bought last year for 550 is now 575 or 600. The increase in the loan limits is accommodating them. Okay. That would allow, typically also the conforming loan, you can put 3 to 5% down, where with the jumbo loan, the down payment requirements are also higher.
Okay. And then, if we took a look quickly, like you just compare Providence to Boston, and if you think about it in a level playing field, those are kind of unfair prices. Boston ends up being so much more expensive. Is there something in there that adjusts for that?
There's a middle ground. Back in 2009, when the market crashed and the jumbo market completely went away, the government needed to make sure the housing market and the higher end housing market had financing options. So they allowed Fannie Mae and Freddie Mac in high cost loan areas to offer what they call a super conforming loan, which basically in a higher end market, for example, in Boston this year, you could get a loan up to $729,000. Now, we wouldn't be at the same rate as the 510 limit we had. It would be about 1/8 or 1/4% higher, but you wouldn't have to move to those more intense jumbo guidelines. So it's an in-between loan program. In Rhode Island, it doesn't really exist because our prices, we're not considered a high-cost market. But Massachusetts, the Boston area, the Vineyard, Nantucket, those would be good examples of high-cost areas.
Okay, and is that pretty easy information for someone to try to figure out, or does their lender or banker usually help them figure that out?
Most times it's going to be the lender that's going to know to help people with that decision and to look at those rates for them. The layman borrower probably doesn't know enough about the market and the programs to really go looking for that program.
Okay. And to kind of finish up, I'm just wondering, your office, you're at the end of the year, we're during COVID. I think I've asked you this question before, but what's the process looking like? Are people trying to race to get things done by the end of the year? Is it taking a lot longer than it took 3 months ago? Is the process really changed, or is it, pretty much status quo, all of 2020?
Well, this time of year is always on a purchase market. People buying homes, it's always a race this year because everybody wants to get in their new house for Christmas, or they want to get in, for New Year. So there's always the people that are signing contracts the week after Thanksgiving, and they want us to close their loans in 3 weeks. So we see that quite often. We are prioritizing the purchase loans, so we can close those in 30 days in a reasonable time frame. The refinance transactions right now are taking anywhere from 60 to 75 days. There's really no urgency on the refi. As long as the people's rates are locked and guaranteed, people are being very patient with the process.
Well, Steve, as we enter, I guess, the holiday season, or we're already here, I wish you good holidays and thank you. Obviously, 2020 was a challenging year, but you've brought some really good advice to our viewers. So enjoy the holiday, and we look forward to seeing you in 2021.
Sounds great. You too, Rob.
All right.
Appreciate it.
All right, when we return, we're going to talk about 401k plans. Should you choose a Roth 401k or the traditional 401k? We'll be right back.